Hi, this is Atmir with the Bulletin Board Heroes here at Vox Markets for Friday, the 8th of April. Starting off with Avacta, which has actually done exactly what it was supposed to do. There was a key reversal to the upside, bouncing off the 50-day moving average on Wednesday. That was when the shares were in the low 70s, and decent follow through yesterday and a gap higher today to the previously suggested £1 to £1 5 pence target zone, just hitting the 200-day moving average. Current view is that while there's no end-of-day close back below the floor of the gap, overnight gap at 91 pence, we could still see a fresh leg to the upside and as high as £1.50 over the next 4 to 6 weeks. Obviously, that's a punchy call, but it was a pretty punchy call even from the low 70s or high 60s earlier in the week. On to a stock which is rather less high profile, but might still come up with the goods. Here we've got Aura Energy, and it looks as though with a bit of toing and froing either side of that resistance line there from September, we're finally going to have a move to the upside. If you're cautious, obviously you could wait for 18 pence to be broken on an end of day or a weekly close basis, and if we can get that, then we could see the shares up to 24 pence maybe over the next month or so. The reason for the enthusiasm, or the relative enthusiasm now, is the way that we had that sideways shuffle just along the 50-day moving average. That's rising at the moment, and then the gap today shows that perhaps the momentum is starting to build. Only back below the 13 pence area, the 200-day moving average, really delaying the upside scenario, but it looks like there's been enough consolidation for a long enough time. On to Chaarat, which looks like it's finally turned around in a meaningful way. Here we've had 2-3 days above the 50-day moving average. That's at 17 pence. We've broken that line of resistance from this time last year at the same level, and above 17, looking for 24, maybe over the next 4 to 6 weeks. A nice sort of U-shaped reversal there for the shares, and decent RSI reaction as well. That final bounce off the RSI line back at the beginning of last month really started the whole process from a technical basis in terms of the recovery. Moving along to a stock which wasn't going to include today because I was just sort of waiting to see whether it would come up with the goods, but bit of bullish divergence there in the RSI window for Edenville, also ready to break that resistance line there from May last year, seeing a familiar pattern or a similar pattern in a lot of stocks in this particular area. So 20 and a quarter pence plus, and on an end of day close basis, and we can see the shares back to the main post October resistance at 26 pence over the next 4 to 6 weeks. Obviously, we're not expecting any fresh lows here, so the potential is probably greater than the mid-20s over a 2 to 3 month time frame. On to Caracal, or GCAT as it's known to its friends. Here there was a suspicion that the shares were bottoming out for the third time, and hopefully the last time, in the mid-80s, 0.85, 0.87, that kind of area. Just waiting now for the shares to break that line of resistance from October around a penny, and that should then unleash a decent move given the triple tested sub 0.9 pence zone back up to 1.4. So as I said, a similar pattern with many stocks in this mining area. They just seem to be breaking the downtrend of the past year or so. Onto a stock which is certainly not in the downtrend at the moment. Geiger counter, a very hot area, the sort of uranium space. Here we've got the nuclear space. Here we've got rising trend channel, which has been in place since this time last year. Top of the channel there is high as £1. That could be the 2 to 3 month target for the stock. The highlight today, of course, that we've broken through the resistance from last month at 70 pence. All that's left now maybe is to break 73, 74 pence, but with the rising 50 and 200-day moving averages and the breakout that we've got on a weekly close basis, hopefully we'll get that by the end of the day. £1 seems to be on the cards maybe by the end of May or sooner. Onto a stock which has got a nice little charting pattern at the moment. Here we've had Invinity with the shares really the natural support there at 72 pence. We had a brief bear trap gap reversal dip over the course of late January, February, but old 72 pence support has reverted, which is normally a very good sign. We've also broken a line of resistance from back in November and gapped through it. And we also have the rising 50-day moving average, which at the lows tends to be a very good leading signal for a stock or market. In terms of the upside, probably at the moment, let's go for a sort of a relatively modest target, but something like £1.10, £1.15 could be on the cards over the next 6 to 8 weeks. And that would be at the top of this rising trend channel that I've just managed to draw from back in January. But the gap there above the 50-day line suggests a lasting turnaround could be on its way, and a move to the 110s on over the near term. Onto a stock which has been requested countless times, and luckily has also managed to deliver on the in terms of its price action. We've got Live Company with, if I can get the right ticker up there, LVCG. Here you can see that we've made good progress. We had a previous target at 9.5 pence for a resistance line projection. I think it was from back in January. So that was going towards what's running around like that. And we've broken that and above 9.5 pence, looking for 12 pence, which is the top of a rising December trend channel. And hopefully we'll see that as soon as the end of this month. But looking pretty good there on the basis of the golden cross that we had for the shares last month. That was around the 5 pence area. So if you bought on the basis of that, you'd be quite happy now. And we also got that very long and strong looking RSI uptrend line in the oscillator window. So pretty good look at the moment. And as you can see there, we're just at sort of 1-year highs as well. If I go back a bit, maybe we can see what the next sort of trading zone would be, but it's a massive saucer formation there. And the old, or the next levels after 12 pence, which was 1-year resistance up to 18. So really looking as though we're going to climb on this recovery almost as quickly as we fell over the course of 2020, obviously affected by the pandemic and other disasters. On to McColls, which is seems to be a bit of a binary bet on the fundamental front, but just sticking to the technicals here, because that's what we like doing here. We had that unfilled gap to the upside yesterday, and that's been held, and was sort of near the top of yesterday's range, which is all very healthy. We've also tested the old March peak there around 3 pence as new support, and so above 3 pence, we're looking for the bottom of that gap at just under 5 pence to be hit maybe as soon as the end of this month. Obviously, we're not thinking about what the fundamentals may be on that situation, so obviously that could be rather wide open. On to Oilex, where people seem to be more enthusiastic than ever in terms of what the shares could achieve. Previous call here was above 0.25. We're looking for as high as 0.45, which is the top of that rising trend channel, 1-year trend channel. That's still on. It'd be nice to see an end-of-day close above 0.26, or a weekly close above 0.26, because that was the old February resistance. But at least while we're above 0.25, the 0.45 idea still stands. Onto a stock which was requested quite recently, and the company's come up with an update today. Here we've got a situation where we've got Physiomics trying to break that 50-day moving average at 4.7 pence. That would really be the trigger for a potential move to 6 pence whenever we get that, whether it's today or over coming days. So above 4.7, looking for 6 pence if we get that end of day or weekly close. In terms of the downside, I wouldn't expect really much price action below the 4.25 pence area at worst over the near term. On to another stock which was anticipating today, the latest news. I think there's some news came out today for Webis in America. Here we've had a gap to the upside, and we'd already broken that resistance line there from back in November. So somebody was obviously guessing correctly at the good news to come. And the view still is that above the resistance line there, 2.8 pence. We're looking for 4.5 pence maybe as soon as the end of next month. One of the stocks of last year was Zephyr, a great sort of transformational move, and on the fundamental and the technical side, in fact. Had a brief bear trap at the end of February below 5 pence, but the shares have reasserted that range that they were in, so 5 to 8 pence. And with a gap through that resistance line there from back in December at 8.5, the view is now that above 8.5, 6.5 rather, we could see a move up to as high as 10 pence at the top of that rising November trend channel. So above 6.5, looking for 10 pence by the end of next month. But helped by the way that the 50-day line is rising, and also on the basis that with the last dip, it wasn't even required to be tested. So that's a pretty strong sign over and above the gap that we've seen today. That's it from me today. More updates over the weekend.